Interestingly, though, Nikki, when I looked at the Bloomberg data, transport inflation went down. What's going on here, especially since there have been transport hikes or at least calls for such, and oil prices continue to be elevated?
Yeah, well, this is just the easing. I think we had oil prices come off last month. And what's come down is private sector transport costs. This is about 3% in the CPI basket. This is your diesel, this is your unleaded at the pump, so private sector. But if you look at public transport, which is your transport fare adjustments, that's still high. And with the pending increase in transport fares, I think this is going to be an issue going forward because oil prices are still fluctuating, still quite high. But if the transport fares are adjusted higher, this is more sticky because it stays for a bit longer until it's brought down.
How then do you think, Nicky, is this going to factor in the next policy meeting of the central bank? I mean, you have Manila saying that he wants more room for comfort, but really, how much leeway do we have here?
Yeah, I think Governor Medalla was also quoted as saying that he's increasingly becoming a bit worried about the impact of the weaker peso, which touched an all-time low yesterday, or weakness yesterday. So that's starting to, I guess, that's at the back of his mind. Definitely going to see BSP retaining its hawkish stance. Maybe there's a little less pressure to do a 50 at the next meeting, but we do expect the BSP to be on the hike path, 25 basis points for the rest of the year at each of the BSP's policy meetings for 2022. So we expect RRP or the policy rate at 4.5 by year end.
Okay, and is that enough to bring inflation back to target? I mean, how long is this going to be feeding in? It's going to take some time. There's going to be a lagged effect. But, to what extent do you see that would be enough?
Yeah, well, the tricky thing with inflation targeting is that you're not actually, in many cases, you're not actually able to bring down inflation per se. But what the real battle is if you get a hold of inflation expectations. So if you prove to the market, if you prove to the population that BSP is doing all it can on its side to get inflation under wraps, so thereby sort of corralling inflation expectations, that's the bigger battle. So I think they're doing it now. They're trying to talk down inflation. They're trying to talk up their rate hikes. So I guess if they're successful in doing that, inflation will eventually come down. It's not going to come down in the near term because there's still so many price pressures out there. Inflation, I think, is here to stay. But eventually, as the economy slows down, because the BSP is hiking very aggressively, people expect that rate hikes are going to immediately slow down the economy. No, it doesn't work that way. And rate hikes don't just affect credit cards. It affects new loans, which affect, I guess, capabilities down the road. So if you start hiking aggressively now, you're going to start to feel the effects early next year or mid next year.
Okay, and how exactly do you think should be the balancing act here? I mean, which is a bigger dampener in growth? You have hot inflation or rising interest rates?
You mentioned as well that the hot inflation did not deter people from spending. Is that going to be what we're going to be seeing?
Yeah, well, it shows that the BSP will have to do more to really match the demand, the type of demand out there, so that the supply and demand come into equilibrium. So I think now that the economy is doing much better, you can afford to hike rather aggressively to get a hold or to fulfill your primary mandate. I mean. Hiking when the economy is in recession is absolutely ridiculous. But when the economy is doing much better, like now, you have all the room to hike to get, to chase your primary mandate.
Okay, Nicky, tell us what's going on with the peso and will it break 57 sooner rather than later? That was a year-end sort of call, and we're seeing that happening now. And this comes, days after the Jackson Hole, and this comes after people have digested the fact that, all central banks are basically going to tighten, and comes on the back of trade deficit, which is really about the demand for exports. So is this a fundamental problem now rather than dollar strength?
Oh, it's a bit of both. The peso is, if you look at all the measures, the peso is probably the worst performing currency in the region. And that you got two factors driving that. You mentioned one. One is the fundamental factor. You're running a sizable, in fact, all-time trade deficit because your imports are surging. So yes, we're seeing more volumes of imports, but you're also seeing more expensive imports. Your energy bill is bloated. Your capital requirements are also more expensive because they're all in dollars. So that's the fundamental side. That's one reason why we're weaker. But the flip side to that is, you have all these major central banks. You have the ECB set the hike on Thursday. The only question right now is if it's a 50 or a 75. So global central banks are on the hike path, and mainly because they recognize that, their economies are a bit better now. Maybe not in great shape, but still better than where they were during the pandemic.